Hi there, good morning. You're watching Buy Now, Sell Now on ET Now. I am Snehi Shah and Cheryl D'Souza will be joining us soon as well. But let's take a look at what the markets are up to before we talk about all your queries, because this is a show where we are going to be taking you through all your queries and bringing on board our experts to help you understand your portfolio better and help you frame your portfolio better as well. But before we do that, let's take a look at what the markets are up to right now. Continues to be somber and lackluster across the market. You have Nifty trading with cuts of almost 0.6% above the 24,600 mark for now, but barely holding on over there. Sensex as well, a 0.6% cut, very close to 81,000 on that index. Nifty Bank has now slipped into the red. It was in the green so far, but continues to trade lower, 0.2% lower for Nifty Bank. You have India Wix that spiked up another 5.5-6%, 17 thereabout is where we are when it comes to the India Wix as well. But it's really been the day of the PSU banks today, because that's the top sectoral gainer today. Good moves coming in across the board. You have Bank of Maharashtra that's up 5% today, followed by Union Bank, Central Bank, UCO Bank, where we have news flow as well. So lots of positive moves coming in from the PSU banking space. Followed by that, you have Realty led afloat by Prestige Estates. Positive brokerage notes continue to trickle in post its Q4 numbers. You have Nifty Media, FMCG, Energy that are in the green. On the flip side, metals continue to be the biggest loser today. Nifty Metal packed down 1.2% on the back of Trump tariff announcements coming in on steel and aluminium tariffs. You have Nifty IT that follows closely, a 0.9% cut on that index, followed by Nifty Pharma, Auto and Nifty Bank as well. So that's what the market breadth is shaping up to be right now. But if you particularly take a look at what the index is doing right now and what Nifty 50 stocks are up to, you have Adani Ports trading with gains of about 1.5%. M&M, Eternal, Apollo Hospitals, HUL, Adani Enterprises, Coal India, they continue to be in the green ever since the get-go. On the flip side, some pressure coming in on Hero Motor on the back of its auto sales numbers coming in. JSW Steel, Bajaj Auto, Titan, Tata Steel, Ultratech Cement, Tata Motors and Tech Mahindra all trading with cuts of more than 1%. So that's what the market breadth is shaping up to be like right now. Advance decline ratio pretty much even, slightly in the favor of the advances, but that's why the broader market is holding up pretty smartly. Nifty mid-cap is doing very well for itself, but it's really the small cap space that's outperforming the entire market, because you have gains of more than 0.5%, now 0.7%, and day's highest point coming in for the broader markets, both Nifty mid-cap and small cap. So that's what the market breadth is like right now. Let's bring on board Gaurang Shah, Senior Vice President at Geojit Investments. We also have Kunal, who's joining us on the technicals. Before we get started with your queries, Kunal, just want to come to you and get your take on the kind of market move that we're seeing today. What are you making of today's trading day? We are trying to inch above. Do you believe that in the second half of the trading session that could be possible at 24,650, 700 levels maybe?
Good morning, Snehi. Good morning, Gaurang, as well as to all the viewers of ET Now. Now, interestingly, after this, mild gap down move, 150 points on the Nifty, there is some, a sense that we've managed to complete a major retracement mode on the index. So, over the last 8-10 days, we've been grinding into this 500-point range, 25,000 on the upside and 24,550 as a support. And this is the second time we've managed to bounce back from the 24, 550, 500 levels, which means that we should now be looking at a completion of this minor range consolidation and a retest of the 25,000 mark. So as an index trader, I think this could be a very good opportunity for short-term traders to try and buy the index at current levels. My expectation is that over the next 3 to 5 trading sessions, we should be looking at 25,000 thereabouts as an immediate target for the index.
Looking positive for Kunal at least. Gaurang, hi, welcome to the show as well. Before we start the queries, we've just wrapped up the earnings season. Give us a sense, your lowdown on what the earnings season has been like and what have you made of the quarter gone by, because it's not been as bad as the street was estimating earlier.
Thank you very much for having me on the show this morning. Morning to you, to my good friend Kunal and all the viewers of ET Now. So we have seen a decisive curtains down for the fourth quarter last week. And to sum it up, if I have to just do a comparison between the third and the fourth quarter, then our sense was that the fourth quarter compared to third quarter was a little bit better in terms of color and shade. If I have to reflect upon the commentaries given by different management post the Q4 earning numbers, then most of them have guided towards strong recovery in terms of growth and top line and bottom line numbers. We had a lot of uncertainty since April because of the news flows of tariff. It is not that it is completely clear now. There are still news flows coming in from US President Trump and the tariff related issues, even now as we speak. But possibly we will see a better time going forward from here. And of course, along with that, we had lower inflation. We had a very strong GDP number last week on Friday of 7.4. And this week on 6th of June, Friday, we have the credit policy. Expectation is that we should see a third rate coming in form of 0.25%. And of course, as we have more clarity both on the local and global front, I think post July onwards, there should be some decent recovery coming into the market.
Very good morning to you, Gaurang. Good morning, Kunal. Thank you so much for joining us. Let me take this query then. This one is coming in from Jay, who's writing to us from Pune. He has about 3,000 shares of IDFC First Bank. He's been holding on this for the long term at a price of around 81 rupees per share. He wants to know whether it's a hold or a sell. What's your take on this one, Gaurang, IDFC First Bank in particular?
Well, so Cheryl, morning to you as well. This has been a bit choppy stock with respect to small private sector bank, especially with the earnings that we saw not only for the fourth quarter but also for the third quarter, and that pain was coming in largely because of the MFI segment exposure. But the verbatim from the management post both the earnings is that they are going to work towards a better recovery run rate, and we should see the gross net NPA coming down. Provisioning should become a little bit more stronger in terms of downside scaling. And of course, the number in terms of CASA should improve. Loan book growth is definitely there, but it has its own problem to take care of. On the fundamental side, as let me give you a disclosure, our research team has a positive coverage on IDFC First Bank, but I think it's prudent to also mention over here. First of all, the investment level of 80 plus is something that the investor needs to rethink. That's primarily because of our targets are very close to where the stock is trading right now. In case if there is, better than expected recovery coming in, then we would revise our targets, but we'll have to wait for a couple of quarters before that. So as of now, we have an accumulate stance from a long-term point of view. But like I mentioned, investment rate at 80 plus is something that is a bit of a concern.
The take on IDFC First Bank. And viewers, while we have begun taking your queries, just a little reminder that when you send your queries to us, send them with the name of the stock, the holding period that you want to inquire for, the buy price at which you've purchased the stock, and any other specific query that you have about the stock. If this is about a stock that you potentially wish to hold in your portfolio, then please mention the name and the holding period that you wish to hold the stock for. In this way, our experts will be able to help you better. The number you can write to us is flashing on the screen, 865-797-4571. With that, let's continue taking your queries, viewers. And Kunal, let's come to you. KPIT Tech, the stock in question. This query is coming in from our viewer Anita, who's writing to us from Pune. KPIT Tech bought at 1,408 rupees in October of last year. Nestle bought at 2,579 in Jan of last year. Asking you for the outlook for the next 1 month only. KPIT Tech and Nestle, what are you making of these stocks on the charts?
I think nothing encouraging if it's a 1 month specific time horizon, because both these charts are just about trading into a band. I don't expect any major breakout coming back into the IT stocks as well as for the FMCG names. I think more or less these stocks should just about consolidate or trade in a range. So don't expect, not expecting any kind of a major breakout move for these stocks. If, they jump up, say, by another 1 to 2 percentage points, I think that could be a good enough zone where you may look to exit, provided your time horizon is very short term and specific towards 1 month.
So that's the take coming in on Nestle and KPIT Tech. There is another query coming in from Sumanti, who's writing to us from Chennai and wants to know about Tata Steel. About 350 shares at a price of 161.61 odd rupees. Kunal, she bought the stock as early as May 30th. Now she wants to know whether she should hold or sell the stock, given the fact that you have the Trump rhetoric once again coming in for that steel and aluminium exports. So definitely, I'm sure when you look at these news flows, investors do get jittery. But don't you think it's too short a time to take a call and such a call on Tata Steel?
Absolutely, yes, Cheryl. I think it's a brilliant stock, and I think metal stocks, over the last few weeks, few months, I think have been showing classical signs of a major turnaround. See, these kind of news flow, they will keep on happening every now and then for individual stocks, for one sector or the other. But what's important is that if these stocks are beaten down for a couple of days, how strong can the recovery be and how soon can the recovery be for these stocks? That's going to be the most important part. We looked at, just to give an example, I think almost a month and a half out back, there was a similar kind of a sharp cut which happened for Tata Steel. The stock fell from 160 to I think 125, 130 thereabouts, and then the stock has come back to that 160 mark after being beaten down more than 30 to 35 points. So I think in that aspect, I think the stock is absolutely well placed. Your time horizon has to be extended. My advice would be to try and hold on to many of these middle counters, including the likes of Tata Steel, and if possible, you can add on to dips for stocks like SAIL.
They're coming in on Tata Steel and the rest of the metal space as well. Let's move on from that. And next query is IRCTC. Gaurang, what are you making of this stock? Because our viewer Suresh from Ludhiana, who's a long-term investor, holds 250 shares of IRCTC at a buy price of 804. He's saying, please guide if I should exit, because there is not been any movement in the stock for the last couple of months. And if you think there is any other stock that would be better to hold in the place of IRCTC. So what are you making of this counter?
Well, firstly, I'll restrict my comment on the sector, that is Indian Railways, because we don't have coverage on IRCTC, so I won't be in position to give a buy, sell, and hold recommendation. But my sense is, and what I have seen since the time this company got listed, and post that, there has been this fantastic upside that the stock saw. Then there was corporate development, and the stock split, and then there was proportionate price adjustment that happened, and then a long period of consolidation. This company basically caters to Indian Railways. A large part of the business is from ticketing, and the other is from railway catering services, and of course bottling of water, packaged water, etc., etc. If you ask me the terms of policies that the government has put in place in terms of reforms of Indian Railways, then there's a lot that has happened, there is a lot that is happening, and there's a lot that is likely to happen. We are possibly waiting to see a lot more Vande Bharat trains running across different states. We are virtually at that time when we'll see the Ahmedabad-Mumbai bullet train. Possibly such projects would be launched elsewhere in the country. And of course, the biggest issue with Indian Railways is the last mile connectivity, which is also getting resolved. So overall, the sector looks very, very good. Unfortunately, since we don't have recommendation on IRCTC, I won't be in a position to give a buy, sell, and hold. In terms of alternative investment idea, well, if the investor wants to exit and look at other investment ideas, then my sense is that banking sector, especially the private sector banking, including public sector bank, looks extremely good. Our fundamental team has a coverage on ICICI Bank, and on the public sector bank side, our fundamental team covers State Bank of India. So he has a choice either to choose a private sector bank or a public sector bank.
Coming in on the banking space in particular, IRCTC, like Gaurang mentioned, doesn't have a coverage on that one. Kunal, do you have a view on IRCTC? 250 shares at a price of 804. What should viewer do?
I think you should hold on, and I've looked at the stock in the last I think 2-3 weeks, especially post results or thereabouts, when the stock fell from 800 to I think now 760 thereabouts. Interestingly, the stock has retested the 50-day moving average today, and then when you try and join the 3 recent supports, the stock has come back to that major trendline support point for IRCTC. So which means that there is a very strong possibility that in the next maybe 1 or 2 weeks, there could be a move towards that 800 mark yet again. So just wait out for another couple of weeks. Let the stock, the trends play out. I believe that you may probably get a better exit than what it is right now for IRCTC.
Okay, so that's we'll come to you with this query because our viewer specifically asked for your advice, and this is Mr. Akhil who's writing to us from Delhi. He's an investor, and his specific query to you is if he can buy JSW Infra and Yes Bank at the current market price for 3 years or more. And his second question is any mid-cap IT stock that you would recommend for a time frame of 3 years or more.
Well, first of all, thank you for asking the question, and question that he has asked me about JSW Infra and Yes Bank. I think in the banking pack, there are better banks to look at, to be very honest. And I would also request the viewers and investors of ET Now that for please don't look at the price of the stock and buy a stock. Look at the credibility and the fundamentals of the stock in case if you want to invest for a long-term point of view. So we just discussed IDFC First Bank. We have a coverage over there. Our team, fundamental team, has a coverage over there. Other than that, in the mid-cap private sector banks, we have a positive coverage on a Federal Bank from a long-term point of view. We also like names like City Union Bank. Our fundamental team has a coverage over there as well. So, look at, or you can buy public sector banks. I mentioned State Bank of India. Other than that, Bank of Baroda, Indian Bank, mid-cap bank with very strong numbers, looks extremely well, or even Bank of Baroda, Canara Bank. These are better candidates. GSW Infra, since we don't have a coverage, I won't give a specific comment on that. But my humble request is that please look at strong names, mid-cap IT names that he has asked. We have coverage on KPIT Tech, Cyient Limited from a long-term point of view. Again, buy quality, don't buy quantity, in the sense looking at the stock price and buying large quantities doesn't mean that that investment will give you fantastic returns.
All right, let's take this next query then, and this one is coming in from our viewer. A lot of queries actually pouring in today. This one is coming from BR Nagaraju. Kunal, I'll take this to you. He wants to know about Infosys and Canara Bank. What are the prospects for these counters? Do you think it's a buy or is it an avoid at this point?
Oh, I think Canara Bank is definitely a buy at current levels. My belief is that many of the PSU banking stocks are now getting sort of re-rated on the technical charts, because these stocks are seeing a price volume breakout, a much more stronger trending breakout, and all of these stocks are now starting to fire, back again after a major price correction into these stocks in 2024 second half. So I think in that sense, Canara Bank is one of the strong, buying candidates, at least on the PSU banking name. See, there could be some bit of volatility which may come back into these stocks post the RBI policy. So you just have to wait out for that. Maybe buying on dips could be a good strategy starting at current levels for stocks like Canara Bank. Infosys, I would suggest a wait because my belief is that many of the IT stocks are still getting into that zone of a consolidation, which means that for the next 1 or 2 weeks, these stocks may be a bit more sideways rather than any kind of a major trending breakout. So Infi, I would suggest a wait at current levels, but Canara Bank buy at current levels as well as maybe on dips you can look to average further.
Okay, so wait on Infosys, but buy Canara Bank is the call coming in from Kunal. Let's move on to the next query. And Gaurang, we'll come to you for this one because our viewer Neha is writing to us from Bangalore. She's making about an 18% profit in Manappuram Finance. She's, okay, so it's a technical query, pardon me, we'll take it to Kunal. Kunal, she's asking for targets for the next 1 to 3 months for Manappuram Finance, where she's already made an 18% profit. She's asking, should I wait for more profits or book out now? A time frame of 1 to 3 months on Manappuram. What's your view?
Frankly, because after almost 2 months or 2.5 odd months, the stock has come out of a ranged breakout. So there could be a chance that the stock may provide a strong acceleration on the upside. Now, since you're sitting at 18% profits on the stock, which means my assumption is that your cost price should be closer to 200 for Manappuram Finance. What I would suggest is that hold on to the stock as of now. Keep a trailing stop loss, maybe 225, 228 could be a good trailing stop loss for Manappuram Finance. And as and how the stock moves up higher, keep on trailing the stop losses in a very similar kind of a proportion, and then continue to ride the trend.
All right, so that's the take coming in on Manappuram Finance. Let's take this next query then. And this next query that I have is coming in from Reena Thomas, writing to us from Kerala, wants to know about Wipro. Purchased 100 shares at a price of 267 rupees per share. Wipro, how does this one look to you, Gaurang? Fundamentally, do you think that she can look at other counters in the tech pack, or do you think it's fine given the fact that the stock is hovering around her buy price? 267 is the buy price.
Sharon, the biggest problem with Wipro is, when you do a peer comparison with the other large cap names likes of TCS, Infosys, HCL Tech Mahindra, or even as a matter of fact, some of the mid-cap IT companies, the comparison on performance is absolutely at a lower level for Wipro. As a disclosure, we have a reduced recommendation, so I will definitely not advisor to go and buy it because my research team has a reduced recommendation. Uh, my sense is, and like my good friend Kunal mentioned just now about Wipro. So you look at Wipro, TCS, HCL Tech, Mahindra. Again, this is on the fundamental side, and as recommended by my research team, these are the long-term ideas. On Wipro, we have a reduced recommendation.
Coming in on Wipro, but let's move on. And Kunal, next query coming for you from our viewer Rajiv from Mumbai. Is a senior citizen and holds 2,000 shares of L&T Finance. He's saying RBI rate cuts will benefit NBFCs. So he's saying that he can continue to hold till 200 plus levels, but he's asking you how much time do you think it will take to reach the 250 level on the charts? What's the prediction when it comes to L&T Finance?
See, I'm bullish on the stock for L&T Finance. Tough to call the exact timelines when the stock would hit 250. But then look at it this way. I think once the stock scales past above a new high, I believe that it's blue sky territories. Which could happen for stocks like L&T. I think in 2018 or thereabouts, the stock took a resistance around the 195 mark. Even in 2023-24, the stock I think made a high of 195 thereabouts, and from there the stock retraced. So it's a matter of time that the stock will scale past above the 200 levels. And whenever that happens, I think post that achieving 250 and then going much beyond those levels could just be a matter of time. So rather than pinning a time to your target prices for the stock at current levels, because it's going to be a lot more difficult to try and ascertain with so much of uncertainty going around, I would believe that just hold on to the stock as of now. Use dips and corrections. L&T Finance is a classical stock which keeps on giving you that 10-15 rupee drop every now and then. That's almost like a 10%, 8% to 10% dip into the stock price. Try and use those dips or those correction as an opportunity where you can look to accumulate further.
We take the next one then that we have. We have this one coming in from, I believe this is from Krish, and he wants to know about M&M. Gaurang, this one is for you. He has about 150 shares of Mahindra & Mahindra in his portfolio at a price of 2,575. And not just that, he also has Tata Motors in his portfolio, about 400 shares at a price of 795. He wants to now know, does it make sense to switch out of Tata Motors and add on positions in Mahindra & Mahindra instead? Do you think that would be an apt sort of a move coming in, given the fact that you have Tata Motors with a much larger global exposure as you compare it to Mahindra & Mahindra?
This question actually puts me in right in between the devil and the deep blue sea. Cheryl,
Kunal is smiling because he's not the one who's answering the question. Don't worry, Kunal, I'll come to you also so that you don't feel left out in such a tricky situation. Why should only Gaurang actually bear the brunt of a Monday blue?
Short-term happiness.
My view is, hold on to both. We have coverage on both. That's a disclosure. Our fundamental team has coverage on both. On M&M, the approximate targets are somewhere close to about 3,400. So there's a decent upside, and we've just seen the month-on-month numbers unfolding, Cheryl. Equally so for Tata Motors. I think there is from 1,100 to sub 600 or 600, and then again a recovery at 700 plus. A trigger of having of commercial business and listing it as a separate entity. The uncertainty in terms of exports to US from their UK plant, as far as JLRs are concerned, is now put to rest because they have done the FTA and the BTA. Approximate target of somewhere close to about 850, I beg your pardon, on Tata Motors from my fundamental team. So, instead of putting all your money or moving all your money into one stock, it is always prudent to have a diversified portfolio so that you don't face any kind of uncertainty in terms of additional risk exposure if in case that one investment has to go bad. So hold on to both is what I would recommend.
Right, hold on to both Mahindra & Mahindra as well as Tata Motors. Kunal, on the charts, does it make sense? Move out of Tata Motors, go to Mahindra & Mahindra. I'm talking about a short-term portfolio if someone has in their portfolio and are also contemplating on that, given the fact that the fall for Tata Motors has been sharp, given the fact that the fundamental news flow or the news flow surrounding the tariffs has also not boded well for Tata Motors. On the other hand, Mahindra & Mahindra has been holding ground.
Well, yeah, I think short-term wise, there could be a chance that maybe M&M could outperform and Tata Motors could underperform. I think we are already seeing that happening for both of these stocks individually over the last, I think, say 1 month or 3 months, particularly when you look at this from point to point with respect to the previous major lows. But then I think it's a matter of question, because Tata Motors. So I look at it this way: Tata Motors fell by more than 50% in this last 6-8 months of price correction. So if the auto stocks and when the auto stocks make a comeback, Tata Motors should play a strong role in terms of a potential up move, which could be much bigger, much stronger, much higher as compared to many of the other peers in the four-wheeler pack. So it's a matter of choice in terms of time frame. Short-term wise, maybe I think you can exit Tata Motors and continue to hold on to M&M. But I believe that long-term charts for Tata Motors are extremely optimistic, and this is a cyclical wave for the stock in downtrend. Whenever the stock recovers, I believe that it could make a very strong and a roaring comeback on the long-term basis.
So that's the take both on Tata Motors and M&M. But Kunal, we'll stay with you because this next query is coming from for you from our viewer Pritam Chatterjee, who's writing to us from Kolkata, and he's asking if now would be a good time to make a fresh entry into BEL, BHEL, or Reliance. What would be your pick out of these three, and would it be a good time to enter into any of these right now?
See, it's a very good time to enter into these PSU names specifically. So I'll stick to BEL and BHEL. But my only concern is because I've looked at the charts in the last 3-4 days for these stocks, and there seems to be a sense that most of the indicators are coming back into a deep overbought territory for these stocks. Of course, news flow is supportive. These stocks have seen good volume push on the upside, but in these kind of scenarios you have to be a bit more patient. You can't react like the entire crowd, that because these stocks are going up higher, that this move would keep on happening into the stock prices. You have to wait for that opportunity for these stocks to correct, and then buy these stocks when there is a reasonable correction into these names. So out of the three names, I would definitely recommend BEL and BHEL, but maybe not the best time, as I said, as of now. Wait out for a certain dip. Say a 5% dip could be a good starting point for both of these names.
Coming in on both of those counters. Let's take this next one then, and this one is coming in from our viewer. I'm getting lost with the way the queries are pouring in today. Looks like a good day, good Monday coming in for all of us. This one is coming in from Vamsi, who's writing to us from Andhra Pradesh, planning to buy Bank of Maharashtra for the short term. That's 6 months. Entry price, if any target, stop loss that you can suggest, Kunal?
In fact, Cheryl, if you remember, I think just about last week or a week prior to that, we were discussing on, Bank of Maharashtra, and I mentioned specifically that my view is on the bullish side. It's a matter of time that the stock would provide a breakout. That breakout has happened the last 2 days for Bank of Maharashtra. It's moved on from 50 to now 57, 58 levels thereabout. I think it's a good time where you can look to start chipping into the stock price. Just, maybe have a two-pronged approach. One is that you buy some quantity at current levels, and in case if the stock dips down to levels of say 53, 52, that could be a point where you may look to average. And on the upside, I think 65 to 66 could be a decent positional target for Bank of Maharashtra.
Bank of actually marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. And to encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative that is Bharat Nivesh Behtar Nivesh Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. And as part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set a reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved one as well. So yes, it's the 4th of every month that we will send you a reminder as well on this. But let's move on and let's continue taking all of your stock related queries. And the next query that I have is coming in from Ritu, who's writing to us from it's from Ritu from Ahmedabad. And she mentioned the fact that she heard your views on L&T, Kunal. She now has 250 shares of Tata Motors and Indian Hotels as well, both bought in the range of about 200 rupees per share. She wants to know whether she can sell one of them and look to invest in L&T, which will make more sense.
I mean, it's a tough one, frankly, Cheryl, because selling Indian hotels and the second stock which you mentioned towards converting into L&T may not be a good bet because both of these stocks are also in their prime. So I would actually suggest that if you have fresh capital, only then look to add on to a stock like L&T because L&T is a stock which you'll have to hold on to it from a much more longer term perspective. But stocks like Indian hotels, etc., I think these stocks can reward you much strongly, even in the short to medium term charts. And because of the fact that these stocks have been more resilient ones on the long term basis, I believe that the comeback for these stocks could also be on the much stronger side. In fact, on the short term charts, I actually believe that Indian hotels could be on the verge of a breakout yet again to that 820 to maybe even 850 mark. So maybe not a best timing, but yeah, I think L&T is a good buy, undoubtedly. But I would suggest that infuse fresh capital and then look to buy L&T separately.
Okay, so that's the strategy on the bunch of the stocks that Ritu had asked. But let's move on. And Gaurang, coming to you, our viewer, Mr. Alok Mahajan, is writing to us from Ghaziabad. And the stock in question is LT Foods, which is your Dawat rice. And his purchase price is 30 rupees. Number of shares is 3,000. And he wants to hold for the next 5 to 7 years. Do you have coverage on LT Foods? What are you making of this stock?
So again, one of the leaders in terms of basmati rice, and of course the brand that is has L&T Food has in the market a decent market share, and of course, there are some really interesting, strong themes as far as food and agri-packaged food companies are concerned. We have an accumulate call on L&T Foods from our fundamental team from a long-term point of view. And my sense is that export market also happens to be a big opportunity for companies like L&T Foods. So my only, is the time horizon that has been mentioned is quite comfortable, in fact, quite long. With that kind of time horizon, it is always prudent to revisit your investments on the earnings front and how the growth trajectory is. But as of now, hold on to it.
So that's the take coming in on LT Foods. The next one is coming from Salini, writing to us from Kerala, has about 100 shares of Texmaco Rail at a price of 230 rupees per share. Kunal, should she go ahead and hold on to it or look to book losses in this one, is what she's asking.
So just hold on to the stock as of now. I think the charts are improving or starting to improve for Texmaco Rail. I think a better chart, of course, a better peer would be Titagard. I think that's a stock which has done exceptionally well. I remember, I think, tracking the stock when it was closer to 150, 180 levels towards a point when Titagard, I think, went up to 1100 plus kind of a mark. So I think at current levels, maybe Titagard could be a better bet. But I think even for Texmaco Rail, the volume patterns have started to improve, which means that the stock should be nearing a decent breakout.
Preferring Titagarh Rail over Texmaco, but let's move on. And Gaurang, we'll come to you. Next query coming in from our viewer Johan, who's writing to us. He's bought Adani Power at 120 rupees. He has a total of 400 shares. He has been holding for 4 years now. He's asking if there is any scope to grow or should he look out for another opportunity. So Adani Power bought at 120 and holds 400 shares.
Also, again, since we don't have specific coverage on Adani Power by our fundamental team, I won't give you a buy, sell, and hold. But let me talk about the sector and some of the stocks that we like. So, the sector looks very promising in the last 10 years. I think because of the policy changes and the discipline that has come in, and the efforts by the government to improve the financial state of state electricity board, power sector has come out to be a big winner. Every year, power consumption is going up at an individual level. There is more power capacity, new power capacity generation lined up by the government in the next 3 to 5 years. We expect the power sector to perform quite well. Stocks that we like in this power generation is Tata Power, NTPC, JSW Energy, Torrent Power, CESC. And again, Adani Power happens to be quite a performer in the sector. But I won't give a specific buy, sell, and hold because our fundamental team does not cover Adani Power.
All right. Kunal, you want to give a view on Adani Power by any chance?
See, I think you can just hold on to the stock. It's not as if that the stock is into a, so most of the Adani group of stocks have a different chart altogether. They've been falling sharply, but Adani Power, on the other hand, I think when you look at this from 2017, 18 lows, the stock has been doing exceptionally well. Currently, also the stock is at a major support point. So once the cycle restarts for Adani Power, you might probably expect that the stock may come back into that breakout pattern of a lifetime high. So it's a stock which you can continue to hold on, provided your time horizon is at least 2 years or more.
Coming right back to you, then Reshma Bhatia wants to know: is it good to buy Titan today for a 20% return in near future? The term that she has asked is Titan looking good today?
So I'm not sure for a 20% return in very, very short term kind of a time period. But yeah, I think Titan is a decent buy. I would not say a very, very strong kind of a buy at current levels because there are a lot of resistances the stock is exhibiting currently. So I think recently also the stock took a resistance just around the 3,600 levels, thereabouts, and then corrected I think 150 odd points from those points. So I believe short term charts are quite okay for Titan, but difficult to time it with a 20% kind of an upside. If you're looking at this as a portfolio stock, then of course definitely a buy for Titan.
Okay, buy call coming in on Titan. Let's move on to the next query. And Gaurang, next query coming in from our viewer, Mr. Radhakrishna, was writing to us from Bangalore. He's asking, is now the best time to invest 1 lakh rupees each in Bajaj Auto and Bajaj Housing Finance for the period of 1 year? What's your view here?
Well, I think I'll be the wrong person to talk about timing. My good friend Kunal is much capable of doing that. But yeah, as far as Bajaj Auto is concerned, because we don't cover Bajaj Housing Finance, so I'll keep my comments restricted to Bajaj Auto. Our fundamental team has positive coverage. I think it was very recently, last week, we saw the numbers for Bajaj Auto and, of course, the month-on-month numbers for the two-wheeler segment. In terms of growth, we believe it's one of the well-placed companies in the two-stroke three-wheeler segment to go to the next level. So if you're looking at long-term without timing or the market, we have a whole stroke buy recommendation from our research team.
That's the take on Bajaj Auto. But Kunal, coming to you, Bajaj Auto and Bajaj Housing Finance, a 1 year target, if you could help us with that.
So, say a roughly 20% target for both of these names could be a decent target for both Bajaj Auto as well as Bajaj Housing Finance. Bajaj Housing Finance, I'll be more optimistic on because my sense is that the entire financial services pocket, I think that sector is yet to show maybe another round of a major upside. So I would probably expect that Bajaj Housing Finance in that leg could start to outperform. But yeah, I think from a current perspective, I think a 20% decent upside is what you can expect for the stock.
All right, so that's the take coming in on the Bajaj counters. Let me take this next query then, and this one is coming in from, I believe, Nikhil is writing to us, and he wants to know about Nikhil's profile is very interesting actually. He's an intraday trader and a short and a long-term trader as well. I'm yet to try and understand, Kunal, if you could help me understand what would qualify as a long-term trader. Long-term would be like about 6, 7, 8 months.
No, on a lighter note, I think if your trades work out well, then you're a short-term trader. If not, then you're a long-term trader.
Oh, spill the beans over there. Like, all right, so Nikhil has an interesting query on 100 shares of Crompton. This Crompton consumer that he has at a price of 356.7 rupees per share with the target predicted at 372. Kunal, he wants to know when would be the right time to exit the stock, or is it better to hold on? He's already has his target in place.
Yeah, so I think it's better to hold on to the stock. But, again, momentum is lacking into stocks like Crompton. I'm sure I think you must have looked at the charts also for, Crompton, but there is a major resistance for the stock just around that 357 to 361 kind of a range. That resistance has to be taken out for the stock to try and come back into that momentum zone for Crompton. So an ideal timing would have been that you wait out for that breakout, say just on the verge of a breakout or maybe few percentage points higher than the breakout is where you could have timed it, because then your time horizon could have been short term and you could have probably expected 375 to 385 as a target range for Crompton. But nevertheless, at current levels, I would just about suggest a hold.
Whole call coming in for Crompton. On that note, Kunal and Gaurang, we'll let you go. That's all the time we had to accommodate all our viewer queries on this edition of Buy Now, Sell Now. But viewers, keep writing to us because we'll be right back tomorrow at 11 a.m. where we'll once again start addressing all your viewer queries. And keep writing to us and we'll have experts on board to address the same as well. But for now, it's curtains down on this edition of Buy Now, Sell Now. Markets at noon is up next.